welcome back to the channel, guys. So we are back with another video, and today we are going to be talking about trading psychology. So we are going to be using New Zealand Canadian as our example here, and without wasting any time, let's jump right into it, guys. So what points are we going to talk about here in our psychology? We are going to talk about four important things, which is going to be number one is going to be fear, number two is going to be greed, and we're going to talk about impulse decisions, and we'll be talking about impatience also. Now we have a separate video about impatience in details or patience in details. You can check that out on our channel, it will be there. So without taking more time, let's jump right into it, guys. For example, let's start with fear, and how does fear is going to affect you in the market. It means you will get a very good entry or a very good point of interest, and you will start waiting to see if the market makes some move, but you are already at your point of interest. What does that mean? Let's take an example and see here. For example, you had let's take one example right here. Okay, you had a move that was coming to the downward side from here. Let's see, you had that a move that was coming to the downward side and came up to here, and it made equal lows. So this is two equal lows, and you saw a change in character. So the market came back into the demand zone right there. Now it means, for example, you have your demand right here. Now if the demand is right here and the price comes back into the demand, so this means this is your point of interest. This right here is your point of interest. Now what do you have to do when the market comes to your point of interest? You have to look for a rejection into that zone, and you open a position to your preferred side. For this case, opening a position to the upward side is the most eminent decision right there. Now for example, market comes back into your point of interest, which is this one right now, and because of fear you don't open that position, and the market ends up leaving without you. Now if you see an impulse move up to this point, now you want to enter, and this is called a FOMO, or fear of missing out. Now this will lead you to put a risk that is very bad for you, and the return will not be probable. Now if you enter a position exactly into your point of interest, exactly right here, you will keep your risk just below all the demand right there, and you try to target the first resistance, which is this. Now this will be your setup, something like that. Now this will be a 2 to as you can see, a 2 to 5 or 2 to, let's put it at a 2 to 5. This will be a 2 to 5 or 2 to 6, which is a very good setup. And now look, when you don't open a position in exactly the point of interest and you wait for the market to make a real move, how does your risk and return look like? Now you're going to long at this point because the market has started making a move. Now it means you have to put your risk somewhere below here. But now how do you target the first possible position where the price is going to go? Is here. But now look at the risk to reward is a 0.7. Otherwise you're going to start looking for some next point where the market is going to go, which will be somewhere around here, which was the supply of this entire impulse move. Now here will be another take profit, but look at the risk to reward ratio is 1.7, whereas the entry that was in the point of interest exactly had a quick 2.5 return with a very good risk to return. This means here is the best. This is the best position to enter that trade before the market makes that move. Now if you have that fear, it means you'll lose out on a lot of trades. So let's look at the second point, which is going to be greed. and how does greed come into the market at this point. Before forgetting, I would like to remind you that we have a YouTube live every day, and we post all the confirmed orders in our Telegram group, our Telegram channel, which is free of charge. You're free to join, and it will be free for a limited time, but at some point we'll try to put a price on entry. Otherwise, now it's free and you can join or enter at any time. The link is in the description, and it's always available on all our YouTube live. Now let's go back to our grid. For example, in the same scenario, you have a long position right here, exactly in the point of interest right here, and you keep your risk in a good position right there. Now you try to target the extreme end point where the move started, and you try to target here, somewhere here like this. Now this is a 1 to 8 risk to return. Now this is straight away too much greed. It means you have to target realistic profits. You have to target realistic entries and setups. Now this is a good setup, but the return here is unrealistic. It means you have to target the zones where the price is most likely to go, which is going to be the resistance right there or the supply right there. Those are targets where the price is more likely to go. They have a good risk to reward, which will keep you profitable in the long run, and there is no need of targeting the most highest support or resistance, because you see the price will go there. It means you have to target these resistances. Otherwise, if you want to target the most extreme end of the zones, you have to place multiple orders and take profits in the first zones where the price will go, and try and see if the last small orders you keep in will have a zero risk, and you try to target the biggest moves. So let's look at another example right here. So that was fear and greed, and we are going to try and look at impulse decision. How does this impulse decision come about? For example, let's first clear the chart right here. So we have, let's put into the 4-hour time frame. I try to see a lot of data points together right there. Okay, we have, for example, a trend here. As you can see, the price is moving along the trend line to the upward side, and after it has broken and retested, it means the price is going to start moving to the downward side, and we try and look at that. As you can see there, price was moving in a downward trend, creating a falling wedge right there. Now, as you can see there, price came right here and made a very strong engulfing candle and a continuation to the upward side. Now impulse decision will be something like this. At this point, price has just broken and retested, but as you can see here, you're trying to open up buy position here, putting your risk here, and you're trying to target the highest point of the market. Now this is going to cost you a lot. Why? Because there was a trend that has just been broken and retested, which means they are going to be a continuation to the downward side. Now impulse decision will come in a lot of different shapes and forms. So let's look at something else. If we jump into the 1-hour time frame, you can see that you can't keep buying in a downward trend. As soon as you see a couple of green candles, you start opening buy position, and you might catch a few pips there, but you will always be on the wrong side of the market. And this impulse decision that are bringing you into thinking of opening random positions will cost you a lot in the long run. Remember, every time you open a position, there are commission and taxes depending on where you are, which country you're trading from, and this will cost you highly in the long run. If you're using prop firms, you already know this, that you can make something like 10k on an account, and you have 2,000 or 3,000 in just commissions. So you have to be careful when you're opening positions, you have to open a position that is moving with the trend, and it will be easier to capitalize on such a trend. Now, impulse decision can be avoided only if you trade with patience and try to analyze the market in a higher time frames, so that you get a move that is really confirmed and it has a high probability setup. So without wasting any time, that was our video and we're going to cut it from here. Thanks for watching, guys. If you haven't subscribed, please subscribe to the channel. Will be hit the notification bell so that you don't miss any video. You get notified every time we post a new video. Thanks for watching, guys.